Hey, my name is Mayuk. In the last video, we talked about the Indian stock market. We took a stab at answering some of the questions that would typically stem out of the current situations, whether the market will crash going forward. I mean, if not crash, at least we'll see a steep correction going forward. And if yes, what are the factors that will drive it? And if not, are there still companies or stocks that are worth investing in, even at these expensive valuations? Are there pockets of inefficiencies available in the market? So if you were to pit the Indian stock market against a mature economy like the US, then obviously chances of finding inefficiencies in the market is higher in India compared to a saturated economy like US. Being a growing economy, you can still find companies that will do well in the future, will match up with the or be a close second to the market leader in a particular sector, and still see a fairly attractive re-rating on their price to earnings. And when that happens, you'll obviously see a decent gain on your investments, right? But then I think if you're betting, in favor of the Indian economy in the long term, especially in these times, you will see a favorable result, because from here India can only propel forward, and will, and situations that are kind of prevailing around the country at this point in time, sentiments that are prevailing globally, India will see a tailwind going forward. Now, there are certain sectors which will see a more profound tailwind than others, and we'll also try and deconstruct those sectors and the companies that are worth investing in those sectors. But we won't be able to cover everything in the video. We'll probably cover a few of these nuggets in subsequent videos. Okay. So now, if you were to digress from the market a little bit, because after all, you don't invest in the market, you invest in companies and stocks, right? And what I have, based on my limited experience that I've had in the market, and I've been doing this from a fairly young age, but what I've seen is there's always a lot of hue and a cry around the stock market, and regardless of which economy you are investing in. By the way, it makes a lot of sense over time to kind of put your eggs in multiple baskets. I'm not just referring to diversifying in terms of stocks and sectors, but also countries or economies. For example, if you have a diversified portfolio between India, US, and China, even Brazil to a certain extent, I think you'll do fairly well, because then you can balance out the risks in each of these economies. And just to give you some idea, and I think you would have taken a few nuggets out of the last video as well, that whenever there is a recession in the US, emerging economies like India, they come in the forefront and they propel forward. And again, let's say if the US economy improves and the dollar index goes up, and so does the crude oil index, then emerging economies like India will start dwindling. So if you are diversified across these economies, both emerging as well as mature economies like US, then you can enjoy the best of both worlds.